All right, Candle Range Theory Trader back with you with another video, just talking about trading and planning the week with the Candle Range Theory. And what we're going to do is use the weekly profile to plan our week and fit that into the Candle Range Theory model. So what we're going to do first is look at the market structure for the weekly profile. There's three of them. We're going to focus on one more so than the others. And I want to thank AM Trades for cooking up this concept, as well as this an ICT concept as well. But he takes parts from it that make sense to him. I took parts out of it that make sense to me. So mine is a little, more simplified, but at the same time, you'll get something out of this. So there's three patterns that we want to focus on for a weekly chart. And this is the type of price action that we want to see. And also, what's also important is the fact that when we see it, we're looking for classic expansion patterns on Monday or Tuesday, a midweek reversal on Wednesday, which is very popular, and also a consolidation model, which only takes place on Thursday and can continue through Friday. So Friday, you do have off unless you see a consolidation pattern on Thursday, then you can possibly scale into the position, but I'm going to show you that in just a few seconds here. So here are the charts that you want to see. Take a screenshot of this, do whatever, it doesn't matter. It is what it is. All right, so on the left here, what we have here is a traditional weekly candle with the open right here. Of course, if it's green, it starts here, goes down, goes up to the high, and then closes right here. Okay, so this is the basic classic expansion model for a bullish example and a bearish example. Now, the difference between how AM Trades takes his expansion patterns and how I take mine, or what I look for, he says that he does not trade Mondays. I do. As you see here, the ideal trading time frame is Tuesday. Now, where does CRT fit into this, though? Because we're going to use Monday's range, at least in this example, to determine where we should be buying at. And of course, my golden zone is right here. You're always looking at the prior day's low right there, or the prior day high, which is right here, where this little crude black line is. That's your little mini trading zone. As soon as price closes below it, ideally during London, not so much in Asia, but more so at least by about midnight, I'd say Eastern Standard Time. Once price starts to, stop out all the short holders that held on Monday, and then start to trend for the week, that's where you want to get in. Friday is a no-go day for this zone, as we're not expecting much Friday, as price has been rising all week. And then, of course, they're going to retrace some. So your best trading days are going to be Monday, Tuesday, and then Wednesday and Thursday, you're expecting a continuation to the upside, or if you're short, to the downside. So the next pattern we're looking at is the midweek reversal. This is a little less common, but it does occur, where again we have our open, okay, on both sides here for a short example, or long, open, low, where we're looking to buy, high and close. The only difference is, okay, how does CRT fit into this? We're only looking at Tuesday's high and low, and ideally you like to see the Wednesday candle sweep both Monday and Tuesday. Anytime price sweeps below two prior lows or above two prior highs, see how it goes above Monday and Tuesday's high, and then if it can close beneath it, that's ideal. And one of the main you can say confirmations of this is when price on the daily chart closes above the weekly open. So in this case, if you're long, the candle being red, the weekly open is right here. And I hope you can see my mouse. This would be where price opened at for the week. Because remember, if it's a short candle, price opens and then closes down. That's the close there. And then you'll see here on Wednesday, price closed up here. It's above the weekly open. This is the number one confirmation that price is going to continue in the same direction. Same on the other side. Price goes above Monday and Tuesday's high. This would be considered the weekly open right here, as price opened for the week right here. See here, opened, went up, and then Wednesday it closed all the way back down below the open. So like right in here, that area. Okay, right there. For the long area, it will be like right in here. That would be like an unfinished chart. So if I covered up these 2 days, if you're just looking at Wednesday, you got a basic CRT pattern with 1, 2, 3, with the third candle pretty much sweeping these and then closing up here, or sweeping these and closing all up here. But pay attention to the daily close. That's going to be the most important clue to let you know that you got the direction right for the week. Okay. And another least common one that we're not really going to focus on is a consolidation weekly profile, where in essence Thursday will be your trading day, and you're going to base the candle range theory on Monday's range. So you have Monday's high, Monday's low, and on the day of Thursday, what Thursday is going to do is just stop out anybody who went long Monday, Tuesday, or Wednesday. All of those guys are stopped out, And then Thursday, Friday just expands to the upside, and that's it. This is not very common though, based on the backtesting I did, but it can happen. So that's something to be aware of. But again, in terms of CRT, remember that CRT, or the candle range theory, can be multiple candles, not just three. So in this case, this is your range candle of Monday, Tuesday, Wednesday. Thursday stops everybody out. In this case, who went short, and then closes again. I remember we talked about below the day open. This will be the weekly price open right here, and it closed down here. For the this example here, the close was right. The open was right here, and then price closed all the way up here. So that's our confirmation that okay, price is likely to continue in the same direction. So weekly closes are very important. So this is a quick reference chart. If you want to write this down, take a screenshot, do whatever. This is how you plan your week. So you already know exactly what you're looking for. Everything is, you can really just turn your brain off. There's really not much to do here, because when you come to the chart, if it's Monday or Tuesday, the main thing you're looking for is a classic expansion. You're not looking for a midweek reversal or consolidation pattern on Monday. That would make sense. But the number one rule on Monday is that Friday's range is going to frame Monday's trading day. Okay, that's the rule for Monday. And then Tuesday, you're going to base your trade on Monday's range. So once again, if you come to the chart on Monday, you're using Friday's range. I'm going to show you exactly how that looks. If the trading day is Wednesday, you're looking for the midweek reversal. Remember, we have that right here. Okay, this is the price action you're looking for on Wednesday. Will it look exactly like this the whole time? No. But this is just an idea of what you want to look for. Okay. So Wednesday, you're looking for the midweek reversal, and you're going to frame it off of Tuesday's daily range, Tuesday's high and low. Okay, so once again, when we go back to the midweek reversal, Tuesday's high and low. This is Tuesday's low. Price goes below it, closes inside of it. Once it starts to close inside Tuesday's low of day, that's when you start looking to go long. Once again, Wednesday, price goes up. Once it closes right here where this crude black line is, it starts to go down. That's when you start to go short. Okay, and then for consolidation on Thursday, that's going to be framed off Monday's range. So obviously, Monday's high, Monday's low. That's all you're looking for, is those key price levels. So this chart lets you know the price levels of the daily high and low that you're looking for. This will be Friday. So again, Monday's level is based on Friday. Tuesday's level is based on Monday's high and low. Wednesday's level is based on Tuesday's high and low. Okay, and then Thursday is based on Monday's high and low. Okay, so I hope that makes sense. All right. So, and if it doesn't click with you, just rewind the video. Be sure to just know that it just depends on what day you're coming to the chart. Okay. The only difference is he says Tuesday starting the week, which you can do. There's nothing wrong with that. But I say Monday as well, and I'll show you why in a few seconds here. Okay. Now, a quick note on price action as well. If you are long for the week, all your buying should take place below the weekly open and daily open of a candle. And all your selling, if you're going short, should take place above the weekly open and the daily open of a candle. All right. So, and then we want to see price close above the weekly open if you're going long, which I just talked about, or below the weekly open if you're going short, which I talked about as well. That's going to be your main confirmation that you got the direction right. And as well, it looks like we can use a classic verified expansion week as a reversal contender for the following week. What do I mean by that? Let me make this very, very plain. If you want to have a bias for next week, because a lot of people struggle with, okay, what's my daily bias? In this case, you're going to just have a weekly bias. Okay. And what you're going to do is you're going to check the prior week to see if it was a class and expansion candle. How does that look? Here it is. All right. Let's start. Pretend this side of the chart just doesn't exist. We're going to start right here on this big fat red candle. This is Friday. Okay. So this is Monday, Tuesday, Wednesday, Thursday, Friday. Big red candle here is Friday. All right. So this is classic expansion because Monday went above Friday. This green candle here is Friday. Okay. Monday went above it, closed below it. Okay. This sets off the week. And then you have 3 or 4 days of straight drop, more or less. A little bit of a retrace here, and then boom, it went back down again. All right. Now, because the high of the week was formed on Monday, okay, we expect the following Monday right here, if it gives us the price action we see, to do a retrace. All right. And that's what it does, because the price has to close. Okay. Another key point is that Monday through Friday, price pretty much has to do a straight drop. All right. But it has to be Monday or Tuesday at the latest. All right. Monday or Tuesday is liable. This is a classic expansion to the downside. And if price closes near the low of the week, and then starting Monday, this red candle right here is Monday. Goes below the low, closes inside of it. Tuesday gives you another chance to enter as well, but it doesn't sweep Monday. And then it closes above the weekly open right here on Tuesday. Remember, I said that's our main confirmation. I've got the direction right. And then you have Tuesday, Wednesday, Thursday, and Friday, all straight rise. All that could have been yours. Entering your position right here near Friday's low, because Friday's range gives us Monday's trading window. All right, but we base it on what price did on Friday. If price can dip below it and close back inside of it, you're good to go. All right. Again, though, can you wait for Tuesday? Yes, but this is the main confirmation right here. Okay, because there's nothing to say that it could poke below and then close fairly up higher. We don't know what price is going to do, but that's all we're looking for right there. So this is a bearish to a bullish example. All right. And price ending near the low of the week and then reverses the next week. So this is 2 weeks. So if you see this Monday through Friday in a straight drop, then the following Monday, I'm looking for, okay, there should be a pullback or some type of reversal. All right, that's what you're looking for. But it has to play out by Tuesday. And then this is a bullish to bearish example. Now there's not as many candles here only because this was the I believe this was the Christmas week of Tuesday of December 25th. So that's obviously the market's closed. But this is Monday. You see how Monday, Tuesday, Wednesday, and I think this is Friday because Christmas was on Thursday, I think, on this day. Okay. So remember, see how Friday closed at the week's high. So what happens on Monday? Now this is when I talked about a straight drop. Price, it may have been during Asia. It poked above Friday's high as well as the prior week high. That was a 2-for-1 and closed all the way down here. Price has nowhere to go but down. All right, remember, we don't trade Fridays on a classic expansion because there's not much to do. It's probably going to pull back some because price has been dropping so much. But this is a Monday to Monday, okay, classic expansion pattern where you see this Friday pretty much consolidated and didn't do much, but it sets up for the next week. And then this Friday right here consolidates and just sets up for the next week. But really, your best exit is going to be around Thursday. If you're taking a classic expansion candle on Monday, you're going to look to be out somewhere in the Thursday time period. Okay. And that fell for 300 pips. Okay. So let's take a look at some real chart examples. I'm not going to go through all of these because there's quite a few for the classic expansion. And then we'll get into the consolidation and also midweek reversal. So once again, I just showed you this one because this is Monday. Okay, Monday poke below, closed above, and then straight rise. I actually just did that on Aussie dollar. Okay, this right here is Tuesday though. All right, so this is if you wait on Tuesday. So these green lines here, just note that the prior day was swept. So this is Monday. Obviously, this will be a no trading day because price closed below Monday's low. So price opens, goes down. Our trading window is right here near Monday's low. That's where you want to start buying. Okay, and then price closes above the weekly open right here. Now, there is one more brief chance to get in on Thursday, which is right here. This is Thursday's candle. Okay, where price goes below the low of Wednesday and closes up here. And then it gives you another chance here on Friday as well. Pokes below the prior day low and goes all the way up. So either one of those would have been fine. This is, some people call this a multi-day W, where you got leg one and leg two. It's all the same thing. It's just a matter of how you want to look at it. But either one of those days right here, either right here, or if you would have got stopped out to get back in. But the main clue is that price poked below the prior day low and below the weekly open. Anytime you can catch price below the weekly open and a prior day low, it's a very thin window here, but really what you're doing at the end of the day is you're catching the wick of a daily candle. So when the candle closes, it should just form a wick. That's where your entry should be. Your entry should not be in the body of a candle. When it's all said and done on the daily time frame, your entry should be in a wick. Okay, so let's keep it brief here. Tuesday, this is another classic expansion. Tuesday, your trading window is right here. This was Monday. Monday set the tone. Boom. Tuesday, stopped out anybody who went long. Closed up here. Okay, did not close near the weekly open, but still gave us good price action to the upside. It did retrace on Thursday. It gave another chance to get back in here. So near here, or maybe even in here, but you're mainly focused on this price level range right here, this Wednesday range. So Thursday and Friday would have been ideal for possibly getting in and taking it to the upside again, but it all came from Tuesday. This is the anchor point, the low of the week. Some people call it a peak formation low. Either way. Okay, and then the stop, some people call it stop hunt, manipulation, whatever you want to call it. The stop hunt should align, or the wicks should align with the peak formation low. So here, here, and here. All these are your trading windows right here. So Tuesday, possibly Thursday, and even Friday. Now, the main reason it still be okay to buy is because remember, price is still below the weekly open. The weekly open is all the way up here. Once price goes above the weekly open, it's a little trickier. Okay, so you still have time to take these expansion candles up, but once it gets above the weekly open, then like right here, it's a little more tricky. So this is another day where Tuesday was the trading day. Okay, so you had the Monday weekly open here. All right, then so we base Tuesday off Monday's range, folks below it, closes above the weekly open. You do have it's not CRT, but you see how price reacts off the weekly open and then explodes to the upside and then explodes to the upside again. See, so some people I'm sure got stopped out here trying to go short on a matter of fact, it might have been me. I think I was taking this short, believing that this was the high of the week. But the mistake was that this was the trading direction because this was just an expansion week above the weekly open. So long was the direction for the whole week. So to go short would have been erroneous there. This is British Pound. This is Monday. So again, we have Monday going below Friday's low, closing inside of it. Tuesday did give another chance, but really looking for a multi-session W, leg one, leg two, Monday and Tuesday. Once price gets above the weekly open, that's pretty much it. You're off to the races. Straight rise all week. Okay, so that was that. Let's see here. This was Tuesday. So you have Monday setting the range, the initial range. Tuesday poke a little bit below the prior day low. Didn't give you much time. They just wicked it and then closed above the weekly open. That's when you're off to the races. Price did spike down a little bit again. If you want to try to scale in here below the weekly open, it gives you that. That's, if you want to experiment with that, that's fine, but that's not exactly what I'm teaching. I'm teaching you get in right here. That's your entry for Tuesday, right there at Monday's low, and then you're off. If it's below the prior week low and prior day low, that can definitely pay out a lot of pips, as you can see there. Okay, so this one here, we have Tuesday, where price went below Monday's low, closed above the weekly open, but it did come back. So it did give us another chance to get in either here on Thursday or here on Friday. And then price once again closed above the weekly open. So this may continue up next week, but we don't know. But obviously, I wouldn't be trying to frame this for a. This just would have been it. And of course, we see what happens next week. But this was Tuesday. This was your best trading day here, and you did have another opportunity on Thursday. Thursday going into Friday. Okay, so this was a Tuesday trading day where you have your weekly open right here. That's Monday's range. This is Monday's high, Monday's low. Tuesday went below it. As soon as it starts coming back up, you're off to the races. It did close above the weekly open, and then there you go. All right, that's your confirmation. When you start to buy and you see this, you'll see, okay, it's above the weekly open. I may be good, and then bang. So you're just enjoying the ride at this point. You're not, like I said, if you want to try to scale in, you can, but I wouldn't recommend it. If you want to try to scale in, I'd recommend doing it right here at your initial entries. You want to try to stack right in there. Don't try to add above the weekly open. That may or may not work for you. So another one here, we have Monday setting the tone. Tuesday dipped below, closed back inside. Didn't close above the weekly open until right here. So pretty much off to the races there. And then Thursday would have been your exit. Friday, again, as we saw, Friday typically doesn't do much with this. This is another Tuesday example. Here's the Monday range. Price dipped in, closed beneath it. Did give one more chance. It dipped below this range again before expanding. And then here you go. Your daily close above the weekly open is right here. That's when you know you're good. And then price expanded through Thursday. And as we talked about Friday, just a little consolidation day. You want to be out by Thursday. Okay, if you're trading on Tuesday, take your profit on Thursday. So here's a Tuesday. This is Monday, Monday high, Monday low. We're only monitoring Monday's low, dip below. Price went all the way up here, closed inside or above the weekly open. This looks like it gapped because this is where it closed, but then this is where this candle opened. So I'm not sure what that was, but I mean, in theory, you could have opened up an entry down here below the weekly open and just enjoyed all of that. I mean, I'm not even sure where it closed because at that point, price was just off to the races. So, but that's your trading window right here on Tuesday. So remember, if you're trading on Tuesday, you're basing it on Monday's range. If it dips below, you're in. So it's self-explanatory once again. There we go. Weekly open close is right here. So again, trading window is near Monday's low or high if you're short. I think I got a couple of short examples here. Okay, once again, trading range down here at Monday's low. Expand to the upside, done deal. Oh, but this is Monday. I'm sorry. This is a Friday candle. Monday dip below, closed all the way up here. So this is where you really want to, if you want to scale in, you try to do so right here because price did not come back. This is the weekly open and Monday closed above the weekly open. So that's why I say to me, it's okay to trade Mondays if price is if price on Friday closes near the prior week low or high. Okay, because Monday was your only trading day to get in at a good rate, and then boom, it just went straight up. Okay, so this is another Monday example here, where this is the Monday range here. Price dipped below it, closed above the weekly open here, consolidation, and went up a little more. All right, but here that's Monday, Tuesday, Wednesday, Thursday, Friday, consolidate. Okay, so again, take your profit Thursday. Okay, so if your entries are on Monday, Tuesday, Thursday is when you start to get out. Here and then another Monday trading day. Okay, same thing, guys, over and over. Price closed above the weekly open, did come back, but if you're entered down here, you were safe. It didn't even come near your entry. All right. Thursday, profit taking day right here. Friday, just consolidated. Okay, here's a short example. I just found more longs than shorts for some odd reason, but this is a Monday high. Okay, Monday's daily range. Tuesday, price went above Monday's high, started to close back inside of it. Closed under the weekly open on Tuesday. Perfect. That's our confirmation. And then boom. And then remember, Thursday's our profit taking day. We could have got out somewhere in here. And then price came back on Friday. Let's see. This was another Monday trading day. So this was Friday, and then this is Monday where price went above, closed below the weekly open. It did come back, but if your entry was here, it wasn't really threatened. Might have dealt with a little drawdown here on Thursday. I'm sorry, on Wednesday, and then obviously price spent the rest of the week consolidating. Once you get a big candle like this, that was pretty much the move of the week, and then price didn't move that much after that. So your profit taking day could have been here or here. Definitely no later than Thursday though. All right. Here's another short example. This was Monday trading day. So we base our Monday trading days on Friday. Poked above Friday's high, closed back below the weekly open. We love to see that. You see that on a Monday? Look out. Boom. Okay. This was 4 days of drop. Tuesday, Wednesday, Thursday, and Friday. So even if you would have got out here, obviously Friday did go up a little bit, but then it still kept tanking. You can't predict stuff like this though, and you're not going to get every single pip. That's not what's important. You just want to be profitable. All right, let's see. This was another Monday trading day, so this was Friday's range. Price went all the way up here, but then closed right here. Now, it did not close below the weekly open. All right, so here's where it closed. Next day, open right here. This might have been on a gap a little bit. Went up again, then closed down. This was our close below the weekly open. Gave a little pin to it. Again, that's not what I teach. You know, if you want to play with that, you can. There were possible entries right here. Matter of fact, this would have been a possible entry right here based on Wednesday's high for continuation. I didn't mark it, but Thursday's trading day would have been based on this Wednesday high. So price went above Wednesday's high here, closed down here, and then Friday hit the prior week low. So there you go. That's that. Let's see. This was another Monday trading day. Price went above Monday, closed below the weekly open. So that was really pretty much your main window. But if Monday closes below the weekly open, I mean, I don't know what to tell you. Yeah, that's pretty much it. That was your chance right here on Monday. So that's why I trade Mondays, because you see here the prior day. This was the prior week low right here. So if this is Monday, this is Friday, Thursday, Tuesday. No, wait, let me just try that again. This is Friday, Thursday, Wednesday. This is Tuesday. Tuesday made the low of the week. So if Monday or Tuesday makes the prior low of the week and ends near the prior week high, then on Monday, this is what I'm looking for right here. I'm in above the weekly open and ideally somewhere around Monday or Friday's high. Take that short, bang. Okay. Midweek reversal, just mainly found one. This is Wednesday. So you have Monday, Tuesday, and then Wednesday is what raids to Tuesday's low, closes above the weekly open here, and then just explodes. It did give you a little bit of a chance to get in below the weekly open. Again, that's a little bit of a daredevil move if you want to try that. But it is there for you. You want to pay attention to that weekly open price, though. All buying takes place. Remember, I said below the open of the daily candle and below the weekly open. Okay, if you're long. So you could have, in theory, you could have got in right there for a good continuation, but that's not candle range theory. That's kind of like scaling in. For candle range theory, you're basing it on Tuesday's range. Okay, Wednesday's price action is based on Tuesday's range. So your best entry was right here. If you scale in a few times right here, by the end of the day, you're up big, and then you're just enjoying all that, and you're done. Okay. And then lastly, the least frequent one is going to be consolidation patterns. It's based on Monday's range. So all you do is mark out Monday's high and low. It mainly just consolidates all week. And this was just a bearish example. Price finally poked above. It poked it twice on Thursday, on Wednesday and Thursday. So anyone who went short on Wednesday probably got stopped out as a result of this. But then price finally did close below the weekly open. But by Thursday, that's pretty much it. So this is mainly your trading day right here on Thursday. It's possible Friday does continue down, but sometimes it won't. So it's just kind of a crapshoot. So that's pretty much it. So that's what you're looking for when it comes to trading the weekly profile. I'm going to go back to the the reference chart, just to remind you that you're looking for Monday range, Tuesday ranges, Wednesday and Thursday. Friday is not a trading day. Okay, it just really isn't. At best, Friday may give you some continuations as a result of what happened on Thursday, but your best bet, your highest odds are on Tuesdays and Mondays and Tuesdays. Actually, Tuesday being the best day to trade this method, and then you can catch some midweek reversals. But as you've seen here, most of the trading use this method is Monday and Tuesday. So this is ideal for swing traders, not necessarily day traders. But some of these moves you can expect anywhere from 100 to 200, maybe even sometimes 300 pips, depending on the ADR of the pair. So I hope that helps. Any questions or concerns, definitely leave a comment. Don't forget to like and subscribe. And I hope you have a great rest of your day. Take care.